All right, we're live. This is Max Gagliardi, and you're watching Talk.Energy Insights here on the 18th of June. David, how you doing?
Actually doing all right. It's been one heck of a week, but as I look back over the last week, we moved my family, my mother-in-law and father-in-law, into an assisted living home, so that kind of changed the perspective of like what's important and how things flow together. But got them in a safe. So thanks for asking. How's your week been?
It's been good. You know, there's always those things that hit you, though, sometimes where it changes your perspective, makes you maybe not worry so much about the small things, or at least that's what it does to me. And you kind of think more about the big picture. This week, my oldest son turned 6, and it's just been really, really cool to watch just him and his little brothers. He's got 2 little brothers, and the middle one's about to turn 3, and just these life events. It's kind of to live vicariously through those little guys is pretty cool. So that happened this week. So
that's cool. Well, I enjoyed doing this last week. We'll kind of recap the markets again, just so we have a placeholder. So if anybody listens to this in the future, we're kind of sitting at a flat S&P 4,200 roughly. Bitcoin was down about 4% over the last week. We're 37,500. Same thing with TI at $70. Natural gas above 320 roughly. Interestingly, copper was down like 8%, and I think there's just some question of what happens long term, inflationary and kind of the perspectives of the market as a whole. But it's been an interesting time, and one of the things that whenever we were talking about things we could talk about, I thought we could maybe just go through, like, I was going through and thinking about what's the most and the strongest consensus trades that I've seen, or kind of biases, and probably right now, not arguing positive or negative, but like the ESG, climate, and energy transition is probably about the strongest one-sided consensus that I can almost think of, that it's like a given now that all of these things are important and all of them need to be put into your perspective. And I know you're running your business that way, and we are as well, trying to address those with the one side, which is like low hanging, kind of build a business with low risk, but then of all of Taleb's perspective of having exposure to options that have low cost. And so just trying to think through where are those long dated, low cost options of, if that consensus is right or wrong, where do we go? And it's just that thing that I think most about is the immense amount of capital that's going to go into this consensus trade. And it's like 5 times the capital for everything in oil and gas on an annual investment globally. If you just think about all the technology of hydrogen, wind, solar, batteries, electric vehicles, autonomous vehicles, and really carbon capture and decarbonization of the industrial side, it's kind of dwarfs anything I've considered in my investment career, and kind of puts things in perspective of like how meaningful this is going to be. So it's an interesting time, just getting a little bit introspective, I guess, with the family transitions and milestones that are happening. But I don't know how you think about it, but is there any place that, if that consensus is right or wrong, you get really interested?
Yeah, it's interesting. I think that there is going to be certainly some right and wrong trades. I mean, you said on the last episode where you talked about how when you have this kind of a push, especially top-down kind of a push, whether that be through governments or whether it be through institutional investors or capital flows, you're probably going to hit or miss bigger to the upside or the downside, just because it's not millions of consumers making choices that's propping something up. It's these chunky regulations or capital institutional investors that are pushing these things, and so that can cause potentially inefficiencies, right? And so, I think it's certainly changing behaviors. Like if you look, and I know that one of the things on the agenda is the Shell Permian news, and I think that's just interesting to me, because there's this aspect of it that you look and say, okay, is this because they've had this recent board, I guess, vote where they had they have to have a 45% reduction by some year, what is it, 2030, 2040, and in their carbon footprint. And so you say, okay, well, is this just a shift because if they get out of the Permian, they can focus on still drilling for oil, but in things like deep water where it's maybe less emissions. And then and I don't know if that's the answer or not, and I'll kick it back to you here in a second, but then you start to think about these kind of carbon leakage themes, right? Where it's like, if you push certain individuals or countries or groups, does it just push the air around in the balloon, or does it actually achieve the goals? And so back to your original question, I definitely think it's changing behaviors. I don't know who the winners and the losers are. The cynic in me will say that the losers will be energy consumers because prices will go up because this is disruptive, at least in the near term. And anytime you have disruption, it can cause volatility in prices. But I'll kick it back to you to get your thoughts on it.
Yeah, and there's two things, and I'll hit the volatility in prices first. And we've been doing look back, and I call it that the lesson that the oil shale revolution taught me is that you can change the profile of the world with investments, but destroy a lot of value as you go through that. And so I look back at like any, probably was the leader in solar development in the late '00s, and really a big part of the power grid in Germany is now on the renewables side. But because of that capital that was invested, they're now burdened with, our average price in the U.S. is kind of 15 cents per kilowatt hour. Germany's 30 to 36 cents. Denmark, another leader in renewables, it has this backpack of burden that's passed on to the end user and the the retail power market, and that's a significant burden. And so while I'd argue that Germany and the efficiency that was added, they lost the industrial jobs to Southeast Asia because of cost of labor and raw materials, but they really did enable the press down in price of solar globally. And so the best export that Germany may have had is the fact that their people are now burdened with a high cost of power, but they've driven down the global cost of solar, which makes it price parity or even more competitive than many of the fossil fuels. And so, that burden of the OOs that they're feeling now has really helped the world, but hurt that local area. And that's kind of how I've thought about it, is like the Shell decision to sell the Permian kind of fits into this same thing. Is like on the micro, I think short cycle oil would be something Shell would want.
Yeah, no joke.
And if you look at how Oxy and EOG and the amount of flaring intensity for the pioneers of the world is down considerably, and you're getting into complete closed loop systems where carbon footprint for North American oil is coming down a lot. And I don't know if it's the optics or the reality, but we did a look at it, and typically there's a big benefit for buying assets from the majors. It has created independence and created immense wealth, and we kind of rolled up the value and get somewhere in the $8.5 billion range, without any midstream or surface, or there may be some other things that are included, but just for the production and the inventory. And if you can buy it like that, that probably ends up being a pretty good deal for whoever's able to do it.
Yeah.
And it's going to be interesting because it is a blocky asset with very high quality. And I don't know if everybody remembers the legacy of the Shell asset was it was kind of intermingled with Anadarko's assets. So Oxy now owns the crosshatch pattern. Chevron owns most of the royalties, we think, and so they have an overlap as well, a little further west. But like it's some of the best well results that we've seen in the Delaware Basin, and so it's an odd thing to think that was what was once the light tight oil play that Shell was hanging its hat on, might be hitting the market. Did surprise us, and we'll be interested to see if the rumor becomes reality. Is how I've thought about it.
You guys put out a good note. You guys put out a good note on it.
Well, thanks.
Everybody should be subscribed to that. How do they find it?
Yeah, so if you go to heaconnect.com, you can request to create an account, and that's probably the easiest way to let us know that you're interested. So yeah, heaconnect.com. There's also a Discover.Energy platform that is the same data. It's more for the industry, so you can take a look at that as well and request accounts that way, just to let us know. Most of our accounts, though, are targeted to subscriptions and institutional investors. So, we're probably going to have some trial balloons out there for people that are interested. But, it's we don't.
Or they can just tune in. They can just tune in and hear your thoughts.
Exactly.
Yeah, hear your thoughts, and then that'll get them into the ecosystem if it makes sense. But what do you think this means for like the other majors? If this does come true, is this like what ramifications does it have for some of the other majors, or does it at all? I mean, it just seems like it's a surprise.
No, the Exxon board fight, really was an example as well. The, Shell ruling, and now this, really gets into most of the Euro integrateds are companies that are moving, less oil and gas for sure. It's just this long dated trend, that I think continues for the majors. I think the U.S. majors, and the traditional independent oil and gas companies, I've said this a lot, it's really difficult if you're an oil and gas company to become a wind company. If you're an oil field or energy services company, you can kind of play on that. If you're a midstream company, you can get your angles of carbon and hydrogen potentially. But if you just produce oil and gas, it's hard to not just produce oil and gas efficiently. And so what's going to be interesting is what happens to the market caps of the integrateds as they make the transition. We've seen examples like Danish oil and natural gas is now Ørsted Energy, and they're one of the largest wind producers in the world, and their market cap has expanded. They just had an investor day last week. Something that we're looking at is they had one sponsor or primary sponsor in the government, but really that did change them completely. That just doesn't happen very often, and really, it's just human nature. It's hard to change. If you're, I've described this if you're the CEO or on the board of a company, you've ascended through the organization, kind of given up a lot on your personal and family side to get there, and then once you're there, you kind of hope that you're going to have the opportunity to create generational wealth. And in the oil and gas space over the last 10 years, that just hasn't happened. And so it's just an interesting time where now you're asking them to change. So not only did you fight to get where you were, you didn't end up where you thought you would be as an individual. Your company isn't there, and now because of ESG and climate, you've got to transition. That's a whole lot for a lot of these managers who kind of lived through the 80s, lived through the 90s, lived through the 2014 forward. It's just we need some new thinking and new thought to really develop visions for how they can improve. And sadly, I've reflected a lot on it. I've been in the oil business for 30 years. There's not very many companies that made a vision that says this is how our stock price and our company creates a lot of value. They just don't think about it that way. Other industries do it all the time. You can hate Elon Musk, but he definitely established visions. Ørsted established a vision, and people get paid for vision. And I think that we need more of it in our space.
How does this? I think this is a good segue into this push for the transition and investments in the renewables. And if you look at Texas right now, which is where you're at, and I think that kind of all eyes are on Texas as this first mover, and looking at what they've done on the wind side, and there's a lot of focus on what's happening with the grid in Texas, and I think both sides, it's very partisan. It's hard to find information when you go to research. I was like, let's talk about ERCOT, and so you scroll through the internet for 30 minutes, and you look, and it's just I can't really find anything here that's not partisan about it. It's a very polarizing topic, especially in February. You had a bunch of different camps kind of really drawing up lines, and it's amazing because we live in this world where all the information is available in theory, and we've got more information than ever, and you can pull up one source and another source, and it is black and white, totally different, and they're both claiming it's a fact. So it's an interesting thing what's going on with ERCOT. They're definitely struggling this week, and just general thoughts. Have you you had your thermostat at 83 last night when you went to sleep, or?
Yeah, it was interesting going through the freeze and losing power, and same thing with our guys in Dallas. Did a whole lot of trying to figure out what the heck happened, and legitimately I lived through the same thing of just the interconnectedness of the natural gas grid, which is Texas Railroad Commission regulated, and the power grid, which is obviously ERCOT. And then just the total ineffectiveness of our government and lack of vision at the legislature and and at the administrative and executive branch in Texas. And I'm not trying to get political, but like this is an issue that like everybody in the state cares about.
Right.
But it's complicated. And so you can't boil it down to one sentence. If I boil it down to one sentence, we need to link the critical natural gas infrastructure to the critical power infrastructure. And then let wind blow when it blows, and we'll be all right. But like unless you say we've got to have critical gas infrastructure available, and the limited amount of nukes that we have and the limited amount of coal that's in baseload, really what's happened this week, it isn't that the wind dispatch has been low. And you can go on ERCOT's website and look at it. Like they're actually making wind dispatch. It's just that there's a differentiated amount of nuclear offline in North Texas and gas offline for maintenance. And I think a lot of that is through the COVID year, a lot of maintenance just didn't happen. People couldn't get on site, and you didn't want a lot of people together. And so there's a deferred amount of maintenance across all infrastructure, power plants, gas plants, all the pipeline systems, and offshore fields. We're seeing more maintenance being done, and a lot of upstream estimates. My perspective is like the legislators should make it a priority to understand it, and you got to integrate the Railroad Commission and ERCOT to say these are the critical things that have to be in the base. And then we don't have storage, so wind's going to be what it's going to be, but you got to have more of the base load that is traditional and legacy power driven. That's just surprising to me.
Yeah, I think that you have to, number one, it shows that this needs to be a mix, obviously. When we hear these narratives of we got to push to one energy source, I mean, nothing's infallible. And so you need to have the mix. And then I think and anecdotally, I've heard it's difficult to get a peaking facility permitted and up and running. And so I think what you need is either excess capacity or you need to be running at above where you need, which is some people may say that's inefficient. I think all the Bitcoin farmers in Texas would tell you that they are all about it because they can take that extra power and use it and then flip it over to demand response whenever it's needed. I know Greg Abbott's been making some noise on Twitter about Texas and the Bitcoin stuff. I thought I had to slide that in there because if you talk to any of those people, they'll say Bitcoin fixes this. Whether it does or not, I don't know. But I do think you need the excess capacity, and so you can then have that ability to be able to meet these times. And I'll tell you my bias, I've said it on Twitter and other places, my bias is I think more natural gas, and not just in Texas, but I think if we really want to make a difference and lower the carbon footprint, if that's truly the goal, I think you can do it you can move to a lot of natural gas. And if you want renewables to be in the mix, sure. But natural gas certainly coupled with sequestration eventually could get us a huge part of the way there. And it's the reason why we're the leader in the world. And it hasn't been because of necessarily the renewables push. It's been because of, shale gas. And so I think redundancy on the grid, but some of this is going to have to be incentives for businesses and through the regulatory environment to get it done, because people aren't just going to build excess capacity probably unless there's, an economic, path for them to do so.
Let me get on my soapbox for 1 second. I actually agree on the gas side, but I think the thing that people don't talk about enough is how much energy efficiency has improved our emissions as well. And I think that the efficiency side of the demand side of changing those reactions, you asked, is my temperature set at 83? I think the real issue is like we shouldn't sell regular air conditioners anymore. Like everybody should have a heat pump on their house. It's way more efficient, way more base load, not the hard on and off. And it is that would change the profile of demand. The same way that you need smart metering. Like it's just shocking that you got Scandinavian companies going into smart meter level 2 and level 3, and we don't even talk about it in the States. Like we're just antiquated on the demand side that there's so much ability to load level and shift that perspective around efficiency. And that I think is the bigger issue. Like, and there's some simple things that could be done. Like you said, on the commercial and residential side, like if every AC, like people typically when you have an AC put in place, it's either a new build or something broke. Well, if every AC unit that was on the shelf was a heat pump, we just have a transition to heat pumps and just incentivize that from the manufacturer standpoint. Like, it's a few $100s of additional recycle for heat pumps versus just having the ability to do a cooling cycle. And so all it is a reverse flow with a couple valves. But it's an interesting thing. I think that the transition is going to be a change in behaviors, both supply and demand. Hopefully it won't be price solely that causes demand to contract. Unfortunately, I actually think that's probably, we talked about it last week, that's probably what will end up happening, is the poorest of us will suffer the most because of bad investment decisions in major projects that don't, that drive up the price of power and drive up, inflate things. And that that price is going to be borne by the people with the thinnest wallets, unfortunately.
Yeah,
I don't see how it doesn't happen. Like, Germany's a perfect case study. Denmark is as well. 2 times the average power price. It just happens. And this isn't saying that solar and wind aren't efficient. It's just that the reality is that, to get to the scale that you need, you're going to need multiples. And I don't know if we talked about this, Max, and this is like, if you want to be 100% renewable, well, you need to have 2 times that plus storage that's equivalent to the amount, because it isn't sunny and windy all the time. And and so, like, you think about installing 2x the amount of capital because of the reliability factor. And that's where I think the world misses things on hydrogen. The amount of reliability for a green hydrogen plant, you can't run a hydrogen plant that costs billions of dollars 40% of the time whenever the wind's blowing or it's sunny. Like the other 60%, if you have 60% downtime on any major project, this is just engineering 101. That's a bad project. And so I think it's going to be interesting to see how reality kind of gets translated into these big decisions, that they are top-down driven, somewhat unfortunately, because that leads to inefficiency.
What about efficiency around this? I was going to move off this topic, but you made a couple points I want to hit on. One thing that I've thought through a lot lately, because I've been focusing on different things around off-grid power generation. Something I've been trying to get up the learning curve and looking at it. And I was just kind of shocked at the amount of energy loss by just getting to the grid. And so this idea that we want to electrify everything. If you look at some of these policies, like around not getting new gas lines laid to homes and making people have electric, stoves and things, it's like, man, you're losing 2/3 of the energy is just lost just doing that. And so if you want to talk about efficiencies, now you've got to create 60% more energy just to do the same task. So, and I don't know how that applies with EVs, but I bet you the ratio is pretty similar to generate the energy in the field, transport it across the grid, then get it into your car and store it in a battery. There's just so much efficiency lost versus just putting the fuel in a pipeline and taking it to a car. And so this hill that you're having to climb is so steep because you're starting out, 60% behind where the other sources. If you could just bring the energy to the demand, like for example with gasoline versus EV. And so when you talk about efficiencies, I've been trying to learn about this stuff, and maybe those numbers are inflated. Maybe it's not that high. I've seen some things. It's always hard to know what's true until you really dig in and actually run the math, which I have not done, but it's anecdotal. But just, man, I think if we're switching to electrifying everything, you don't know how efficient electricity really is at the end of the day versus some of these other things. And for example, like EVs, maybe there's a hybrid approach, pun intended there, right? Where it's like, does it make sense to go straight? If you want to just make things, to your point around the heat pumps, more efficient, do you just make cars ultra fuel efficient through a hybrid where you can get 50, 60 miles to the gallon, and that kicks the can a few decades until these other technologies catch up? But it's just stuff that, like, I love thinking through the different, going beyond the surface level and looking at the implications of moving our energy mix, how we do it around.
I guess the end question is it gets into that again. The consensus is we need to limit the flow of carbon into the atmosphere, and so the benefit of EV is you're moving that from multiple point sources to one point source that then you hope you can either do it 100% renewable or with a carbon capture or nuclear or something along those lines that would be low emissions or no emissions. The question is like that has to be the first question. Like that's the founding comment. It isn't that we want an energy transition like that. And then the next step is that isn't the goal. The goal is like, okay, so we believe the world, the consensus is that, and what I'll say is consensus is usually, aren't necessarily the best way to make big decisions without real fact finding and questioning the consensus. But let's just to say we need to limit carbon flows. You have to think that is the first path, and then every decision comes after that. And so it isn't about just like, hydrocarbons are capturing, solar energy over millions of years and are a great store of power and energy. They're easy to transport, and there's a reason why we use them. But, I think that the thing that I look at is like, well, when you go off grid, why not locate that Amazon Web Services center down in, the Tacoma Basin or in the Fayetteville, right, or one of these places where you have ample natural gas, a place where you could sequester carbon, and you just go off grid completely, as opposed to trying to tie it into a grid that has a mix of a bunch of different sources. Like just know completely that your Amazon, Jeff Bezos, you could probably do that pretty easily. Maybe layer in a little hydrothermal in the right places or geothermal. And in the right areas, and you can do it as well. Like it's going to be area by area, and each part of the world is blessed with a different source of power. Right. And the North Sea was blessed with wind, so you do that there. The East Coast is actually blessed with wind if you can get past the not in my backyard. The South is blessed with wind and solar. Oklahoma has plenty of wind. Like that, we've just got plenty of natural gas as well. So the reason Europe likes hydrogen so much is not because like they were a natural gas consuming LNG and Russian importing business. A lot of the gas grid in Europe has a great lobby, and so they love hydrogen because you can transport hydrogen on a grid that they've already invested in.
Sure.
It's like you shouldn't go that path, like because you just don't want. I mean, hydrogen isn't the most efficient way to go in our belief, but you have a lobbying group in a lot of Europe that is pressing in that direction. And it sounds nice. And so it's like these decisions that are made on the point sources around how investments are made need to be made at the most local level. And that's why I got on my soapbox about Texas. Like if they would just openly communicate that it isn't that wind was bad in February or solar was bad in February, but like I said, the left and the right can't come to like, here's where reality is, both failed. We didn't have enough reliable electricity to then keep our gas compression capacity online. So then gas fields went offline, gas plants went offline, and then gas-fired power plants went offline.
Right.
Then we had a compounding problem that led to, a frequency problem in the grid that required shutdowns. And right now we've got too much maintenance going on the gas side. Well, right. If gas was integrated into critical infrastructure, you could solve that problem. For some reason, they don't talk like that. Yeah. I just said it in two sentences. And
I love how you ended it with that, because like I think that and we'll move on because we've got a couple more things to hit on, and this is good. But I love these types of medians because we're living in a world where everything is, snippets and nuance is lost. In fact, some people would say nuance is dead. And I think these types of conversations and podcasts and, whenever you get people to actually have a conversation, I think you can explore the nuances of these topics, which is why I love doing it. And I think you did a good job hitting on a bunch of them there. So we'll do more of it. I think we can talk about all those themes a lot and maybe dive into some of them. I'd love to talk about the EV stuff and just a bunch of these different ones in later episodes, and maybe get some other guests on too. But I think all of this will be impacted by the monetary policy in the U.S. and what's going on. And you talked about inflation earlier, and well, that's going to have an impact. And the Fed met this week, and we're now getting signals that they are going to have to, and everybody's been saying it, but they're going to have to eventually raise rates. And they throw out these kind of 2-year timelines that by 2023 we're going to be at a higher rate environment. But I think those rate increases could start as soon as next year. And just that, I'm seeing real inflation just in my day-to-day life. I mean, we're looking at everything from trying to invest in real estate. Like last year, I started getting very interested in real estate and trying to invest, and was lucky that I bought some properties in the summer of last year. And some of that stuff is just, you're looking at what's going on. It seems like that's out of reach at this point. There's things that are just getting crazy on the price side. Maybe some of this is transitory around the commodities and the pent up demand, but I think this is all very, in my mind, bullish for inflation continuing. And I just think it's going to have ripple effects throughout what we do on the energy side. But just your general thoughts, and I can give you mine after.
Yeah, I've been trying to find, the consensus is inflation is coming, and so that says that's priced in. And so like the way I think about it is the price, there's this analogy of like, back in Gulf War I, whenever I got into the business, there was a thought that like, well, whenever Kuwait gets invaded, that oil price will go up, but actually oil price collapsed because Kuwait does not equal oil production, and there's a shit ton of inventory that was built going before that war. So the world basically said, hey, this invasion happened, we've got enough inventory, and oil went down. And so there's like, if inflation is the underwritten expectation, then that's in the price already. And so I just wonder how much is underwritten into prices today. Is the way I've thought about it.
I hope it is, because it's been high the last year. I mean, like if it keeps going on this pace, then I'm going to start just buying assets. Give it your money somewhere.
It's that hedge of man, we could get into like monetary policy, and like the reality is, I talked to a buddy who took his son out to lunch yesterday, and he's like, man, it's $19 for the two of us, and he's got a toddler. And he's like, feels like it's like $14 the last time I went out pre-COVID.
Yeah.
And I do think that's hitting across the board. And if you just think about what's the value of an asset, it's kind of what is its growth, and then what is its yield, and that yield is essentially off a risk-free rate, and that's pegged to what's your Fed funds rate, your 10-year typically. And so like as that escalates, you've got like a real question of what's the value of assets. And I do think inflation is something you've got to think through as far as hedging against. I just wonder, like, how many people have you said that we're in a deflationary time? And and you said you wanted to have some arguments around things. Like if you're an inflation bull and you believe it's going to happen, I could argue that it's really hard for me to say that a pandemic that shut down the economies were the thing that caused a deflationary trend because of technology and innovation to stop. Like if anything, we've got a restart of the economy. We've got to get people back to work. And so it's hard for, Island Grill down here that's now $19 to attract, 2 more servers in as more people, as the place is packed. So they're paying more. And that restart of the economy has inflationary trends. I'm going on a trip, and there's no rental cars available because they sold all of them last year. Well, rebuying all those rental cars is going to require, an inflationary trend, and like you just don't have enough chips available because they basically underestimated the pace of the recovery across all sectors. And it was a horrible time for all of us who follow solar companies and solar inverter companies who said they had a backlog of chips available, and then they missed numbers for the year. But the reality is they're getting back on pace and think that those problems will be resolved. But to get back on pace, everybody's competing for something, then you have a price spike until you get back to where we were normalized in 2019 levels, and we didn't have inflation in 2019. And so like it's this oddity of a 2-year hiatus on economic growth because of a disaster globally causing inflation seems like a strange spur to me.
Now it's the money, though. I mean, like that's the thing is I hear all you're saying, and intuitively there's some of that's true. Like, right, for example, if you look at like what'll happen if these prices do go up the way that they have, especially like if oil and some of these raw inputs for everything go up rapidly, like they've been going up, if oil continues to, and nat gas, and you look at that's deflationary, right? Because it makes things more expensive. People have less money to spend. But I think it's just like the amount of money pumped into the economy. Like it's got to go somewhere. And, we have a business and things like a PPP loan, like that's a powerful thing, like for businesses that otherwise may have shut down. Or, for example, these stimulus payments I think there's some staggering statistic that I've seen repeated a lot in these kind of personal finance talks or things you read, where it talks about how the average American doesn't have $500 in the bank, or I can't remember what percentage of Americans, some really high, like above 50%, doesn't have even basic savings. And then you look at this last year, I think in California, the total benefits, if you weren't working, was like $57,000 a year equivalent of what people were making just on their these benefits. And that was a state and federal combined, and that was for some period of time, and it was annualized, right? So I don't know that they really made 57,000, but they were saying if this was annualized on a monthly basis. And so then you think about all these people that have gotten money in through the government, and that's got to go somewhere. And so I think part of it is just, it's kind of like math, right? If you have this many dollars and then you create a bunch more dollars, those dollars are now worth less in theory, and unless there's growth, and if there's growth, maybe that sops some of that up, right? But I think the jury's out of what's going to happen. I think what we're going to see, and it's going to be really interesting, is by 2022, it's going to almost rewrite the history books around what's going to happen, because we hadn't had anything like this happen, really, like COVID and the shutdown. And so it's either somebody's going to be right, someone's going to say, look, it didn't cause inflation, all this money printing, we just did whatever, pumped trillions and trillions and nothing really happened. Or the people that have been screaming, yelling fire that this is a bad thing, they're going to be proven right through sustained higher single digit, maybe even double digit type inflation or waves of it potentially. So I think it's just fascinating. It's a really interesting topic to me.
Now there's Taleb talks a lot about this, and this Fat Tony analogy trader effectively killed it on the financial crisis of, when you see consensus out there, go the opposite direction and look for places to make those long dated tail options that are, have low risk, but, multiples of the reward. And so I've done that in crypto. Like, I think there's some long dated questions of store of wealth in the Ethereums of the world. And you're a big Bitcoin bull, I'm a little less so. I understand your use case better now after talking to you about it. We can talk offline some more, since you got some real business going on, and it sounds like you're going to make a killing. Congratulations on that.
Well, we'll see. I don't know. I mean, it's,
but the reality is like, I just think that there are these questions that, like, when you have a consensus that is so consistent, and inflation feels like the consensus, same way, like whenever you have this consensus, it's either in the price, or it have to be way worse than people expect for inflation to then change the profile, or the markets as a whole, which seem to be relatively highly valued. I mean, I know energy well, and I look at the spreads between energy stocks that are up a ton year to date, but they haven't closed the gap versus the broad market. Like, the multiples of the market have done well. Like, we're at highs for the S&P, and so, like, it's kind of crazy to me whenever I think about energy stocks. If you price in 70, could be doubles from here. Yeah. And like, you go down markup, and they could be triples and quadruples, even though, stocks like Oventive have gone from 250 to 30, like, you've already had 10 baggers off the COVID lows. But it's just interesting, like, as you think about inflation, like, how do you hedge it? Like, you talked about land, like, but if you're a general person, like, if you're just, me working, like, as a 20-year-old at Shell, made 40 grand a year, what do you do? Like, essentially, you just kind of live your life, and you don't really worry about it. And I'd say that's where the majority of the world is. And
it's a tax in a way, right? I mean, like, the printing of the money is kind of just it's like a stealth tax that everybody has to bear. And really, the people without assets are the ones that bear it more. And so if you look at, like, why the wealth gap is what it is, and is this further widening it? And, like, I think that there's just, like, real evidence for me personally. Like, if I hadn't been in a 401k, or if I hadn't had my net worth, if I'd have just been sitting on cash, like, all the dollars that I put into a retirement account, or that I've invested in whatever real estate, like my primary residence, things like that, had I not done that, I would just have less money. I mean, that's just a reality. And so if you don't have the ability to put money into assets, which many people do not have that ability, because you're just somebody in your 20s just working, or you're somebody that has had to, use the money that you've made to live on, because a lot of people have to just live on the money that they make. Yeah. And so, man, it's an interesting topic, and we could keep going. We're going long on it. I would love to spend more time on I love the macro stuff.
Think about the question I think about is, you have So you have cash flow is king. Like I always said, this revenues are for egos and earnings are for fools, but cash is cash.
Right.
You have some amount of maintenance. You got to pay for your food, you got to pay for your water, you got to pay your power, and you got to have a house. But then you covered your maintenance. Then you have your personal market value, and then you think about growth cap. That's really the thing that most people don't have access to, and that's where like the crypto world turns in, like a store of wealth and ability to transfer value from person to person, and then have the ability for growth beyond that. But like that's really where value is created, and that's why owning assets makes sense. So then if you think about that spread of cash flow less maintenance plus growth is your yield. Like that's how much you get to keep.
Right.
As inflation happens and Fed funds rates go back up, my first loan was for $1,900 to buy a 1981 Mercury Capri, and it was 21%.
Yeah, wow.
As a poor kid in Missouri, I was able to take a loan at 21%. That yield was very low, other than at $3.17 an hour for washing dishes at the steakhouse. But it allowed me to actually then grow from there. But you got to have access to that growth capital at whatever price, and so many people don't have it.
Right.
And as the rates go up, that cost of that growth capital goes up, and it makes it further and farther afield from people. And so that's the thing that I don't think we spend enough time thinking about. That wealth spread and access to growth capital is the problem with inflation.
Yeah, absolutely.
And that's going to be brutal.
So moving on, the last topic here, because we could talk about that one for a long time, but what do we think, back to your comments around the energy stocks and where they've gone and where they could go, and how do we think about OPEC and what is, that's kind of the big elephant in the room. And I get on Twitter and some of these other social media platforms, and people want to give hot takes on both sides. I see people saying that there's no way OPEC's going to let prices keep going up because it'll cause the energy transition to get here faster. Other people, like myself personally, think that they're probably going to let it run because just the game theory around why would you spend money to increase capacity to make less money? I mean, you can right now, at least in the short term, get a nice little boost to economies around the world that have been getting crushed because of COVID. I just think that in the short term, there's not a lot of incentive for them to keep prices low. But just the game theory around all of it, what do you think? That's a loaded question.
The critical path of what OPEC has done very, very well is they have scared the bejesus out of the North American oil market. And so
yeah, right.
And so negative $37 oil made us all vomit just a little over a year ago.
Never forget that day.
So the reality of 420.20 was something that is scarred in I think everybody's memory, and it's not that long ago. And so what the reality is as long as the U.S. and North America as a whole doesn't grow considerably, I think prices are allowed to run.
Yeah.
I think the thing that's going to be interesting is watching some of the private Permian companies that they're in this perfect position of they're not public. They're going to reap the rewards of growth. And
right.
Even we looked at a company, Matador, MTDR. We saw them increase their capital budget on their first quarter, suffer for a couple days, and now they're one of the performing stocks because their numbers got better. That's the reality. Cash flow got better for increasing activity levels, but the top 5 producers aren't doing that. They're all 0% to max 5%, and kind of this GDP level of growth in perpetuity. And I think that just keeps everything in this kind of gradual crack up boom for oil price. And the reason that cracks to $90 or higher is what I've talked about. I think I even said $150 last week. Someone pinged me 150 hike. What do you think? But we did have I was surprised. We had 1,100 views on that thing. So some people watched. But the reality is I just don't see how the U.S. doesn't respond at some point. And then I think there's a governor in how much Russia and how much Saudi capacity there really is. Because so it's this question of they don't really want to give away all the spare capacity, because if you look at inventories and OPEC spare capacity, whenever you go way down on spare capacity, oil price runs and you almost lose control to the upside. And that's the case that I made internally for the 150. Now you want to make a case for keeping oil prices low. Like, again, I don't know how much spare capacity there is, and they don't want to unleash the North American shale boom again. And there isn't the access to public capital, so it's really cash flow driven. And cash flows are going to be up a lot, though, year over year, given the price move in 2022. Even now that we're looking at a $70, $65 to $70 handle, it's going to be really interesting to see how much companies increase their spending. And this is my belief is the first phase of capital increases in North America will be deemed efficiency. We're getting an extra 10 to 20% out of every rig, every frac. Then the second phase will be they'll have a call on to attract services, and I think labor is going to be the governor. Like, I don't think it's going to be that easy to ramp in many basins just because the service industry needs higher margins to attract more people. And like, I think if there's one other consensus out there is if all the service industry could collude and say we're increasing our prices 10%, they would all do it, but they're all scared to death because none of them want to do that because they're worried they'll lose business. But they really do have that prisoner's dilemma that I think is pretty tough. And until they can get better margins, they can't attract more people. And so it's this like kind of self-governor on North America. But if there was an unleashing of North American shale again, that's about the only thing that I think could cause oil price to go down. And I just don't see that happening maybe until mid next year after you've seen a bunch of free cash return through share repurchases like Conoco is going to announce at the end of the month, or the special dividends that EOG did, or the variable dividend model of the Pioneers and Devons. Those quarterly checks that start coming in 2022 are going to be a lot of money, and I think that'll cause the stocks to do pretty well, particularly if they have real capital discipline.
It's bullish on like small, nimble producers that have decent acreage, right? That can take advantage of this, that maybe are privately funded or that have access to capital, and that can be surgical around exploitation where they want to do it versus these larger public equity guys that you follow a lot. I mean, I think those guys have all these other things that they have to manage. But if you're kind of like, I'm in Oklahoma and I've grown up around, and people talk about Oklahoma, like the plays here, the Stack and the Scoop and stuff being dead. And certainly there was this huge wave of private equity investment that's died off. But I think if I know people personally, and I have families that I know and groups that I know and companies that I know that have been here for 30, 40 years just crushing it. And they're just strategic. They just wait until prices dictate what they need to do, and then they hunker down whenever it doesn't make sense, and they have good geologists and they can target good areas, and they've been able to make money for manageable debt levels and just be prudent with the financing and pay down debt. And it's kind of that old school, you actually have to make money and drill good wells. And if you can do that, then you can survive. But I think that's bullish for groups like that because, they're not so probably as concerned about moving the needle. And I don't know that there's enough groups like that to truly move the North American needle unless you have the private equity investment and then the public's really doing a big push to meaningfully raise production. I just think it's good for the little guys right now that have access to capital and that have good acreage and that can, be surgical about how they want to exploit it.
Yeah, I think that the private deployment that doesn't have the burden of trying to drive markets and market sentiment is probably the sweet spot for the golden age of small to medium-sized private companies that are under-levered. You're probably in that perfect triangle of prices are going up, service costs are low,
right?
Cost of production is relatively low, and you got this nice. It's a pretty sweet spot to own oil and gas assets, I would think, as we look at things.
Yeah. Well, we've hit
your
on
capital as quickly as you can. Private equity. Get some of this stuff.
I know
because you're going to miss a window if you don't get it deployed.
Well, it's an exciting time. A lot of changes happening. That's why I think these talks are fun weekly. You know, I don't think we'll struggle for things to talk about. And we've gone over on kind of time. I think we're pushing 50 minutes. So we'll probably call it. But I would, we did get a decent amount of views last week. And some people have been commenting on these. If anybody has requests for things they want to hear about or topics they want us to cover, we'll certainly look at those and incorporate it in. But Heikkinen, I appreciate you doing this.
Too, and thanks for setting it up. It's been good. We'll keep doing it.
Yeah, we'll talk to you soon then. Cool. All right.